Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street, starting from the benchmark index moves to sectoral action and all the stocks that are buzzing the most in trade. So let's quickly get down to understanding what is the current move right now. Remember, we had opened the session with record high moves at 20,110 and above, but we did see mild profit booking taking place through the trading session, although the markets are just flat, with the Sensex now inching up above the flat line, 0.1% of a move on the upside, but the Nifty holding below that 20,000 mark at 19,985. Just a 10-11 point of a drop is what you can see. Let's look at the broader markets to see how are they moving in trade, the mid caps and the small caps in trade, and also then let's get down to understanding how are the Nifty Bank and the other sectoral indices are doing at this point in time. So both the mid and the small caps are seeing sharp declines coming in, 3% and 4% fall coming in, a very sharp profit booking being taken place. And remember, in the afternoon trade, we did speak to Devina Mehra, and who had been cautioning that these are the spaces that she believes there could be frothiness and the markets could witness some kind of a profits being taken off the table as well. So perhaps that's what we are witnessing right now. Let's also look at the sectors. Remember, most of the sectors of the Nifty are down in the red, barring the IT index that's actually holding up in an otherwise muted set of the numbers. Nifty Bank is down in trade. You can see the IT index. That's the one that's up in trade almost at the day's high level as well. So we'll get down to understanding most of the stocks and how are they performing. But if you look at the financial services, healthcare, banks, be it private banks or autos, consumer durables, PSU banks, metals, oil and gas, all of them are down in trade right now. Even the Adani Group stocks, they are also seeing some slip coming in. On the Adani Enterprises, Adani Ports, you have Asian Paints, Apollo Hospitals. These are the big drags on the Nifty 50 right now. What's holding up some stocks from the pharma basket, Divis Laboratories, Dr. Reddy's, or so, they are holding up in trade. But if you're looking at large part of the markets still down in trade. On the Nifty 500 space, you do see some stocks that are buzzing in trade, but even the gains over here, if you see Brightcom Group, that's been sustaining, Blue Dart Express, JB Chemicals, LG Equipments, these are the stocks from the broader markets. The Nifty 500, these are the stocks that are moving up sharply in an otherwise weaker setup. But let's get our expert right in. Ruchit Jain joins in. He's the lead research analyst at 5paisa. Welcome, Ruchit, and thank you so much for taking the time out. Now, we did see record highs, magic number 20,000 yesterday. We did open at a record high level, and then there is this profit booking taking place. How are you looking at the market outlook from here on? So do you think the rally is done and dusted now? There could be another bout of consolidation that will follow suit, or do you think after a mild knee jerk we may again be back on the uptrend?
Yes, hi, very good afternoon, Sakshi. Well, Sakshi, if we look at today's market behavior, then we are not witnessing any kind of sharp sell-off in the large cap stocks, but it's primarily the mid cap and the small cap stocks that have been correcting. And the correction was much due because, post the recent run-up, the momentum readings were quite overbought, right? And usually whenever we see such overbought readings, the indices go through a corrective phase. So today we are seeing some negative readings, negative crossover in the mid cap index as well. And what we have seen in the last 1.5 months, during the entire last month of August, large cap stocks had corrected. When Nifty corrected from 19,990 to 19,250, but mid caps and small caps continue to make new highs. And I think this month or next few trading sessions, we would see exactly opposite of that, where mid caps would continue to correct. They have to come off their overbought readings. So mid-cap stocks could witness some more profit booking from these levels, but no, I don't think that there would be any sharp sell-off in the large caps. So if large caps don't correct, then ideally indices should not correct. On the lower side, 19,800, 900 would be a good support range for the market. And then on the higher side, 20,150 to 200, that could be seen again. So we are not much bearish on the market, but yes, from a very short-term perspective, we are advising our clients to focus on large cap names and stay away from the mid caps until we see completion of this profit booking.
Okay, got that. What about the IT space? They are coming back into flavor. TCS has hit a 52-week high today. The shares of Infosys at a day's high, currently trading about 2% higher. In the last 1 month, Infosys is up about 7.5% to 8% odd also. 2.8% of an up move on TCS right now. The other stocks also moving up in trade. How are you looking at this coming back of the IT space? Does this rally have more legs now? Is it the right time to get into IT?
Yes, I think certainly yes, because these stocks have already seen a decent underperformance in last few months where the entire market had rallied, but IT stocks were of the back foot. Now, Nifty IT index has also recently given a breakout above that hurdle of 31,600. So, ideally, after such a breakout of 1.5 years of consolidation, the momentum should resume now again on the higher side. Now, even if you look at within the mid cap, within the IT space, the mid cap stocks had rallied in last one quarter, but it was the large cap stocks which were the underperformers. So, I think now since the index has given a breakout, the large caps would take the leadership. TCS, HCL Tech, Wipro, Infosys, these are four names which technically are looking quite strong. So I think no, since even the mid caps are turning volatile, so in such volatile times, such defensive space no, would gain more attraction. So large cap IT we are positive on, and we believe that these stocks would relatively support the indices as well.
Okay. Any other pockets that you've identified in the markets today that appear strong on the charts now that should increase in momentum?
So ITC is one of the stock that we believe that no is a good bargain buy over here. The prices have recently seen a correction from the high of 450 to around 440 levels, and this is just a correction within an uptrend. Stock is trading around its support, so we believe that no, that's a good buying opportunity over here. So ITC is one stock that one can look to buy with stop loss below 438 for a probable pullback move towards 478.
Okay, ITC looks promising at this point in time, up in a trend, up by 1% in trade today, despite the muted trend in the overall market scenario. Is there any pocket that, Ruchit, you would advise investors to stay away from right now, where you believe that, a lot of run-up has happened and now there could be slight caution that needs to be warranted?
So what we usually see in the bull market when mid caps come in that last phase of up move, I won't say this was the last phase of the bull market, but at least in this leg of an up move, a lot of stocks which are fundamentally not good, they too show some good positive momentum. So ideally, I think traders should stay away from such kind of stocks. And as I said, I think the mid caps and the small cap stocks would show some more corrective phases. So just because of one day's corrective action, don't be in a hurry to do any kind of bottom fishing in mid cap over here. So rather stay away from the mid caps for time being. Yes, at lower levels, I think again the PSU banking names would be one pocket which I would watch out for. Where on declines one can look for buying opportunities over there.
Okay, Ruchit, let's also focus on the auto space stocks. Of course, there was news flow in the morning where Nitin Gadkari suggested that he would request Finance Minister to levy additional 10% GST on the diesel engines and vehicles, and that led to the stocks really cracking in trade today. Of course, they are off the lowest point, and that is because Nitin Gadkari did say that there is no active consideration of the government, but this is just a proposal that he'd like to make to the Finance Minister as of now. As he believes that the time is ripe, that we should now stringently start moving towards cleaner fuels, and he believed that this perhaps could be one way in which one could dissuade consumers to buy the diesel vehicles at this point in time. And we did see all the stocks of the auto index dragging in trade. The ones that were hit the most were the ones that did have a major diesel portfolio, stocks like M&M, Ashok Leyland, Bharat Forge. These are the stocks that drag the most, apart from the auto ancillary pack that provides for the diesel stocks like Tube Investments or so. But your thoughts on the auto space stocks right now? What should one do?
So it's good that the clarity has come in the same day today. So I think the stocks would not react much negatively from here on. So ideally, the auto space has done well in last few months, and I think this outperformance would continue going ahead as well. Some of the auto names such as Maruti, Bajaj Auto from the two-wheeler space, even M&M relatively is not looking much negative. I think buy and dip strategy should be kept from the auto names in case because of the market volatility, if we get any significant declines, then one should use such declines as a buying opportunity.
All right, understood that. Well, many thanks, Ruchit, for being with us on the show and discussing all these insights with all our viewers. Great to have you with us always on Business Today TV. Let's look at the markets now. It's the Sensex that's pulling up from the lowest point, about 100 points higher in trade right now, about 0.2% uptick. But the Nifty is flattish, but you can actually see some buying coming in from the lowest point. So looks like there could be another effort from the Nifty to close in the green right again. So we are inching towards the higher points now, 19,991 currently on the Nifty, down about just 4 odd points. So you can see slight pickup really happening in trade right now. In terms of the sectors, where is this buying coming in from? Apart from the IT stocks, which had already been supporting the markets, you can now see financial services stocks inching higher in trade. Stocks like Bajaj Finance, they have seen some uptick coming in. ICICI Bank, Bajaj Finance, HDFC Bank, Kotak Bank and Axis Bank. These are the stocks that are pulling up in trade. So remember, in this rally of up till 20,000, it was two pockets that clearly did not really contribute much in the market surge in the recent bull rally. And the one index, the one sector was banking and the other one was IT. And both of them are starting to pick up now. And that is what in one voice most of the experts are saying, the time for already run-up sectors like mid-cap and small caps to see some profit booking right now, but it's the large caps where the focus should shift right now. So these are the pockets that are actually showing some momentum on the upside, which also indicates that the bull rally may be here to sustain. And now you can actually see another effort by the Nifty to inch back to those 20,000 levels as well. You can see a 19,997, slight uptick coming in on the Nifty as well. Just about 7 minutes to go as far as the closing of the session is concerned, and looks like we may make that one more time effort to close above the 20,000 mark right here. We'll keep an eye on the market movement and continue to get you all the expert voices to help you understand where exactly are opportunities emerging for you. So do stay tuned. Don't forget to subscribe to this channel and also continue to engage with us on our other social media platforms as well. Until then, thanks for tuning in.
What a glorious day to be a part of this wonderful journey that's unfolding on Dalal Street. How do you rate sentiment after this successful completion of the G20 event?
Really, it was a class apart, and it showed the world that India finally has arrived. It is a moment in the sun, and the G20 clearly, I think, showcased that. So I think overall the mood in the nation is very positive. First for the Chandrayaan, and thereafter we had this G20 event. So on the whole, I think sentiment, the feel-good factor is at a multi-year high, as I see just now. And even Wall Street, cannot match what is happening over here on Dalal Street, where we are seeing so many stocks scale to newer and newer highs. And the way the markets are shaping up, I think next few quarters looks to be extremely interesting.
Right. Deepan, a couple of things. The wisdom that's visible in your graying hair has spanned about 3.5 decades. I just wanted to understand, at this kind of a sentiment level, why are our foreign funds and friends net sellers on a fairly large basis? Would you have a view on that?
That is the question you have to ask them. And I'm scratching my head to figure out what is the thing that why FIs are selling. But I think, they follow a very straight-jacketed approach to investing. And optically, the price to earnings ratio certainly are on the higher side in India. And that may be keeping them on the sidelines. But you have to go deeper to understand our Indian markets. And this is not a 1 quarter or 1 year story. There are many companies which have got very good earnings visibility for the next 2-3 years or so. And if you take those earnings into the future, then today's valuations, of course, few stocks are overpriced, but today's valuations also may sustain these price levels. So I'm a bit perplexed why they are